Breaking at this moment, markets are up. Chairman Powell is going to hold a question and answer session called The Fed Listens. He is expected to address today's jobs report, of course, this week's market volatility, and the slowing world economy. Of course, trade worries are going to come up as well. Let's go and bring in Edward Lawrence with more on Powell's comments here. Edward.
Yeah, and exactly what he's saying. He's already started speaking here, Charles, and the chairman of the Federal Reserve, Jay Powell, is saying the economy is in a good place. He goes on to say that it's the Fed's job to keep it there. What is not in this speech, though, is what he has said at the last news conference and the last FOMC statement, is that the Fed will do what's necessary to keep the economic expansion going. Now, he's speaking at this Fed Listens event here at the main headquarters in Washington, D.C. That is actually the room where they make the decision to cut the interest rates or not. Now, Powell is saying that inflation is running close to but just under the 2% target range. There are a few voting members of the FOMC who believe that inflation running under that target is a very big deal for this. If you look at the wage growth in the last jobs numbers report, 2.9% over the past 12 months, and that means more people are making more money, yes, but that's not enough money there to put inflation pressures in this economy, and that's a signal that the Fed may undershoot inflation expectations again. And the chairman believes that the tools that are being used right now are effective on the economy, although he does worry that the U.S. economy as well as world economies are facing challenges like low growth, low inflation, and low interest rates. Now, the reason he says low interest rates is because in this speech he's concerned that the lower federal funds rate does not leave a lot of room if the next downturn comes to support the economy. Now, the Fed is getting input here at these events to see if they need to change monetary policy, how they communicate, or how they do monetary policy to meet their mandates of low inflation, stable prices, and maximum employment. Charles, back to you.
Edward, thank you very much.